can always tell gold is really bullish when it is breaking through all-time highs on days where yields are actually going up. Now, if you don't know what I mean by this, specifically the dollar index is up, and yet at the same time, gold is up. And this, like I was just saying, is a testament to how strong this gold market rally is. And yes, it is possible for the dollar index and gold to be going up or down at the same time. They don't always move inversely to one another. But let's talk a little bit about what's going on with gold, what's going on with the dollar, and our indices set to make another all-time high today off of the strong retail sales numbers. Let's jump in. So if we zoom in over here, what you'll see is that this is the latest retail sales month over month figure that came out this morning, and it beat expectations. Of course, what is retail sales? Let's map this out for a second. This is the state of the consumer. It's one of the best readings that I like to look at for basically understanding, are people out there being able to buy things or not? And although we've been hit with a couple years of really tough prices going up, inflation has at least slowed down. Prices are still going up. Don't get this confused. But inflation slowing down means that prices go from going really fast up to slower. So basically prices kind of look like this in the United States. There was this big jump and then we've started to slow, and now this is what we're looking at. So please remember, prices don't usually go down. People have been waiting on the sidelines like, when are prices going to go back down? It's a fundamental not understanding of how the US economy works. Prices going down in the US economy almost always comes with terrible recessions and everybody losing their jobs like 2008. Because, again, prices going up shows signs of a healthy economy. Prices going up too fast shows something's broken in the economy, and or perhaps there's like an invasion into Ukraine or something, creating oil prices to go up and driving all the other prices up. There's lots here. It's a difficult thing inflation is, but what we actually want to see from a consumer standpoint, the average person probably wants to see, whether they know it or not, they probably want to see prices just go back to slow and steady rising, not rapid rising, which was very painful for many people when they went to the grocery store and they ended up, laying down on the floor knocked out because of what the cash register rung them up for. Who knew that egg prices could beat the crap out of you? $8. So back to what we were saying about retail sales numbers. Retail seemed to be a little bit stronger than what was forecasted here. We were forecasted month over month to see 0.3% growth. We got 0.4%. So solid numbers on the retail side. And let's see what the market reacted with. So the dollar index is up, and this makes a lot of sense, right? A stronger consumer means a stronger, read on the economy. And a stronger economy, generally speaking, makes the dollar index go up. It's part of the reason why the dollar has been going up a good bit. Now, I know that there's an election right around the corner and that this is a triggering topic for people who say the economy is not good or it is good or trying to debate this topic. I'm not saying that the economy is rock solid, perfect, amazing, but there has been some good indications recently. Whether you want to try and conspiracy theory whether or not those numbers are fake or not is your business. But for me, what I'm looking at as a trader is these numbers are coming out a certain way that indicates dollar strength is, likely the story right now. And I don't care if they're fake or real numbers. Honestly, it moves the market. It's been something that's helped me get consistent to focus on these numbers and watch them play out. And it really doesn't matter to me if they're fake or real, to be completely honest. As a trader, there's still very tradable things that I can make money off of. So when I look at, retail sales numbers coming in strong, that continues to support this recent just nonstop rip to the upside that we've seen in the dollar. In fact, just while we're on the topic of the dollar, I've been actually looking for opportunities to get short things like Euro USD. And yet again, I've got to drag my fibs lower because these levels are just not getting retested because of how much dollar strength there is, which is dragging the euro lower. While we talk about currency pairs, dollar CAD is also a strong one. And specifically, the reason I picked these two pairs is because when I look at the top setups algorithm on the Edge Finder, and let's just isolate for major currency pairs for a moment, what you'll see is that on the US dollar front, we're getting some mostly dollar bullish readings, leading to Euro USD getting a bearish reading when looking at all the economic data, technical and sentiment readings like the commitment of traders data, retail positioning. I don't want to get too far into the weeds here for a second. We'll come back to this in a moment. Dollar CAD is bullish. So we got two readings here strong enough on the Edge Finder for possible setups, but I've missed them. I wish that I was in these trades. These were ideas that were generated by the Edge Finder some time ago, and I've just missed the pullback. In fact, I was looking for the setup right there. I was looking for that pullback and just barely missed it before this thing continued to roll over. But such is trading. We move on and we look for better setups. But with all that said, why is gold topping the scale right now, up 0.78% at the time of recording this video? Gold looks really strong, but why? Well, let's think about this from a perspective. I'm not going to lie, I would not have expected gold to go up this much today because, again, retail sales coming in stronger shows some strength from the consumer. So a stronger consumer is a stronger thing for the dollar and usually would not be perceived as a positive thing for gold because, remember, gold typically thrives on, recession fears or at least a slowing economy. And most importantly, is the Fed going to print a whole bunch of money and are central banks around the world going to print a bunch of money? That is, generally speaking, one of the most bullish things that can happen for gold, which has been, by the way, why gold is such a monster this year. Central banks are cutting rates. They are cutting rates actively. And this brings me back to my point. Don't bet against a strong uptrend. Even if you're like me and you're like, oh, well, this data should be, sort of short-term bearish for gold, you can get caught up playing that game, but don't forget the bigger picture. This thing is a bull monster trend this year. Gold is up 30+% at the time of recording this video from the start of the year. That is an incredible return for gold, which doesn't historically move that kind of percentage in one single year. It's been a rock star blockbuster year for gold, and trying to bet on the top of that has been the bane of the sellers for the entire year. It's not something I'm trying to get into. I am not shorting gold, although I am a bit cautious on how much more upside we have in the short run on gold. I've clearly been wrong in that recently. I didn't get short gold, but I mentioned, I'm pretty neutral on it right now, and gold has continued to push higher. From a strictly price action perspective, gold looks really strong. If you get some sort of break and retest, very well could see continuations. However, why is this thing still going up? Well, one case to be made is that we've got an election a few weeks away. People are uncertain about what's happening there. So there's still some uncertainty with what's happening in the Middle East and Ukraine and Russia. There's many different catalysts here that could continue to keep gold trading at a premium, meaning people are buying it as a bit of a hedge, as a bit of a defense to their portfolios. Now, I mentioned the top setups page, and let's broaden the scope here. What I'm going to do is I'm going to remove the neutral readings from the Edge Finder, and instead of just looking at major currencies, I'm going to add in indices and crypto. Now, gold usually is on there, but currently gold is getting a neutral reading, so I don't really have a setup. I mentioned just a moment ago that I'm kind of feeling neutral about gold. It's because some of the economic data has come in strong for the dollar, which in my view caps the upside for gold. But clearly there's been no cap, it seems, recently, so I've been wrong on that idea. That being said, I'm going to stick to my system. It's what works for me. It's what I've traded for years, and it has generated some pretty good results for me in the last 4 or 5 years. Anyways, let's take a look at the full list. We got the Dow Jones, DAX, Bitcoin, NASDAQ, UK 100, USD CAD, Nikkei, SPX, and Euro. Why should you care? If you're someone new to my videos, what the heck is this list? Why does this matter? Well, as a trader, you've probably heard the term confluence. Most traders use that in a technical analysis perspective, meaning I'm looking for moving averages to line up and support and resistance and Fibonacci's and MACDs and all that stuff. But when I talk about confluence, what I'm discussing is the macro. I want to see GDP numbers, PMI numbers, inflation, or retail sales like we got today, showing strength or weakness for an underlying economy so that I can base a trade off of a bigger picture, fundamental story. The stuff that really moves the markets is what's happening in global economies. Or if you're talking about a stock, their finances are going to drive that individual stock. Same thing on a global economic scale, the US economy, their output, their jobs market, their inflation rates, what the Fed is doing. These things are what really drive prices. So for me, this is what I'm currently basing my idea off of. I want to see data points coming in that complement my strategy, not work against it. So when I look at this, I see bullish readings on the S&P 500, the NASDAQ, and Bitcoin. Those are things that I like right off the top. USD CAD is a little bit far away from a setup for me, and the Dow Jones might be worth looking at. So let's look at US 30 starting out here just as a possible idea. So if I go up to our US 30 chart, this is another one that's run away from me, but I'm looking for pullbacks into the 38.2% retracement. SPX, same thing, looking for pullbacks if I can get them for possible entries across this recent all-time high that was broken recently with this big pump. So I like stocks going into the election. I know people are a little bit uncertain of what could happen, but I honestly think regardless of who becomes the president, the stock market is not going to, catastrophically collapse in either direction. I think that both presidential candidates will likely spend a lot of money. And if there's one thing Wall Street loves to hear, money spending is a good thing for companies, innovation, etc. And I don't think either one of them have any track record of not spending a lot of money. They certainly love to spend our taxpayer money. It doesn't matter which president you pick. Guess what? They're going to spend your money. Anyways, you might debate on who you think will spend it better. And that is important. And of course, you should vote if you're a U.S. citizen. I am personally voting for Jerome Powell. So, if you would like to join me in voting for him, then maybe we can just elect him to be our emperor, and things will all be nice and dandy from there. Anyways, I am kidding. NASDAQ 100 also looking pretty strong here today, and semis were up quite a bit. I have a good sized position in my semiconductor ETF, SMH. Got a nice little pop on this position here that I am trading. I took this trade inside of our VIP room. By the way, if you'd like to see every trade alert that I take, it gets shared directly in our Discord server. If you'd like to join that, by the way, you can click the link down below in the description. Use promo code YTVIP. It'll be showing up on your screen right now. You get a nice discount off of our memberships. And if you have any questions or you'd like to pay with crypto, or if US dollars are very expensive in your country, here's a little tip for you. Send us a direct message using the first link in the description and we'll help you out. We do have, for certain countries, offers available that make the memberships, or the Edge Finder for that matter, more affordable. So if you'd like to get access to the Edge Finder, there's also a trial link in the description. If you enjoyed looking at this tool with me, you can have it yourself. It is something that we offer. My company, A1 Trading, builds software tools, and it is definitely worth getting access to if you do not already have access to it. We do offer 30-day trials. They are paid trials, so if that's something you're interested in, all those links can be found below in the description. Anyways, back to semiconductors. Taiwan Semi had some really good earnings. So if we take a look at TSM, this is a Taiwan semiconductor company. Look at that move. Big pop here, up 13% for the company here. And of course, SMH is a ETF that holds many different companies in one singular basket. It's also, of course, got big holdings in NVIDIA, which is up. I do also have shares of NVIDIA. I'm very long semis, which is a high risk, high reward trade. I'm very well aware of that, but I do think that semiconductors have a lot of potential to continue to move. We got this big breakout from NVIDIA, which I took as a big signal to really isolate into semiconductors. So I'm pretty concentrated at this moment, but we'll be trailing stops and moving things accordingly within the VIP room. So if you're trading the NASDAQ, trading the indices, trading gold, we're very active on all those things within the group. So check it out. Anyways, taking a look at oil as well. Oil is another one to watch because oil prices have come down. That sort of dampens the probabilities of an inflation problem, which is a good thing going into, this period of time where we're trying to get the Fed to continue to cut rates. We want to see inflation continue to come down. Inflation is made harder when oil prices are rising, because if oil prices are rising, inevitably, all other prices tend to rise too. Think about it. If you pay for a box of cereal at the grocery store, and the grocery store pays a certain amount of money for it to get on their shelves so that you can buy it, if the price of the shipping companies goes up to ship that cereal box because oil prices went up, it's going to come out to the consumer. Remember, inflation usually impacts the end user, the consumer. We'll see. Anyways, right now oil prices are not threatening, which is a good thing for the inflation story. Speaking of, the current inflation story, we got yields slightly higher here today. The 10-year up by 1.94% actually is a pretty good jump in yields this morning, which is arguably why partially the dollar is up. And it also is a bit confusing as to why gold is up so much when yields in the dollar are up. It could be a confusing thing. But that being said, you have a lot of uncertainty that's coming in this market due to the elections and what could happen there. Now, in my videos, you might notice that I talk about every market. I talk about stocks and ETFs and yields and currencies and commodities, but there's a very specific reason that I do this. And if you're somebody who's on the fence here, maybe you're like, well, I only trade FX, or I only trade gold, or I only trade the NASDAQ. I want you to listen to this conversation that I had today with Miko and Marco on the live streams. We discussed the utility that each different market offers a trader within their portfolio and their toolbox. And we tried to make a case for why traders may actually benefit from considering trading beyond just one singular chart. I know sometimes you hear people say, oh, I only trade gold. Well, that's fine if that works for you. Don't let anybody else tell you otherwise. But just check this clip out, because we had a really good conversation about the importance of, you taking advantage of different markets for different purposes. Check this out.
Well, with currencies, with me, it's the ease of trading them. Again, when I first started, I was introduced to Forex, and I've kind of just stayed with it since then. So I've got so much experience there. But with currencies, it's the ability to play both sides of it, which I quite like.
Yeah.
And going forward, I'll be looking to trade some indices more because I want to kind of expand what I'm looking at, because with indices, it's kind of one dimension. And I know if with swing trade, I'll just be looking just to play it to the upside majority of the time. But with trading, with FX, if the market is flying, I'm looking to short. The market's falling, I'm looking to buy, because it can give me that kind of hedge almost to some positions. So I quite like currencies because of that. And there's just so much to choose from as well. So there's always the opportunity on the cards. But yeah, because I've been trading for so long, I'm so comfortable with it, it's hard to kind of trade anything else really.
Yeah, no, I love that. And I think that, you've basically outlined the pros and cons really well. It's like if you're trading currencies, the beauty of it, I remember in 2022 when the markets were just like tanking, which it is, by the way, it is no fun to be predominantly long index trader, sectors trader, stock trader. It is not nearly as fun when the markets are down, because you're just, losing money and waiting for the next, rally, and you're just hoping for it. It's a very frustrating experience. So when markets are going straight up, the indices are easy. They look great. It's so, oh my gosh, it's just easy money. But during that time, currency trading actually was a really nice piece of my activity that was less correlated to just markets dropping. So that can be really nice. Marco, same question to you. So currencies are your primary thing that you're focused on. Why currencies over commodities or indices or other things?
Yeah, the biggest reason was in Europe, Forex is much more popular than stocks. So if you want to learn to trade online, it's most likely going to be Forex. So that is why I started with currencies. And I kind of like the same things that Miko mentioned. So you can buy, you can sell. It's not like the indices where they are mostly going up. But in the future, I'll definitely be looking to add the S&P and gold into my, let's say, trading analysis and executing trades. I did test the strategy that I used for Forex. I did test it on the S&P and gold. It didn't work as well, so some adjustments will be needed. Especially the big adjustment will be to mostly look for buy setups. But I think it's very smart to combine multiple assets, multiple instruments, and not just say, I'm a Forex trader and I'm going to forever trade Forex. I think that's a very narrow-minded view, and it's not going to bring you the most returns. I used to I view it like that, but I think that was a wrong approach. And in the future, I'll definitely be looking to expand.
Well, the beautiful thing about markets is that each one has unique traits, and they can actually, it's kind of like, this is super nerdy, but if you ever played Yu-Gi-Oh or Pokemon, and I'm not really a big either one of those, but I just know this reference. They say if you have all these different cards in your deck, each thing plays a role. It's like an artist that each color plays a role in what they do. So for traders, each market has its pros and cons, and it has its strengths, weaknesses, things that, can help to balance out. Drawdowns in one area can be mended by others. So just something to mention. But I just wanted to also ask that question. It's really important for the audience to think about too. Which markets do you trade and why? Have you considered adding new things to your roster, and do so carefully, right? It's easy to jump into new things and lose a lot of money. So I'm not, both of these guys are big into back testing like myself. It's very important that if you're going to step into a new market, you make sure you don't mess around and take it very seriously. But there are other opportunities out there than just if you only trade indices, or you only trade stocks, you only trade Forex. Just consider what other markets may have to offer as well. If you're someone who watches my channel and you're from outside of the US, I want to tell you quickly about our top broker partner here on the channel, 8cap. 8cap is regulated by ASIC and SCB, and through TradingView, you can actually trade directly with your 8cap account. They also offer very competitive spreads and commissions. They have a wonderful support system and team, and you can trade anything from Forex pairs, commodities, indices, and even some select stocks. Check out 8cap using the link down below in the description, and there are some special sign-up perks if you use that link down below again in the description. Thanks for watching.